All set. Welcome.
All set. Awesome. Everybody's here. Welcome, everybody, to our webinar on a very exciting topic of taxes. But it is exciting, and Richard is going to really kind of make it accessible for all of us. It is nowhere near as scary as I think most of us think it is. So, first of all, Richard, thank you so much for taking the time.
Well, thank you for having me.
So Richard Prinsey is the founder and owner of the Professional Tax Alliance, a organization that Master Tour has partnered with actually for things like this. But Richard, give us a little bit of a background before we get started.
Well, I've been in this industry for 25 years plus. I'm a CPA from out of New York. Did spent most of my time working in the firm originally started as an offshoot of me doing some taxes out of MTV's conference room and doing all my friends' taxes who were all in the business. I used to be a musician back in the day, so I was just kind of helping them out. And then as it grew, the office grew and the staff grew and the firm grew. Um, and I spent a good 20 years on the phone every half hour for 12 hours a day, speaking to everybody who's kind of leading this industry now. I've known them since they first started, right? So I feel like I've been on every tour that's ever happened because I hear all the stories and I hear all the problems and I solve a lot of the problems for people. That's how I kind of started.
Nice.
Now we're trying to help people get ahead of that, right? So
Yeah, for sure.
yeah.
And where we'd like to start, and we have two polls for the folks in the audience. So I'd like to bring up the first one that is going to ask you all what you are using now to file your taxes. So Anne Marie, if you can bring up that first poll. And then Richard, when you look at things like this, like what do you kind of see out there for where people are finding their solutions?
Well, I mean, all of those areas are definitely relevant. I'm sure you're going to get people in each one of those,
Hmm.
right? So, but a lot of people use the tax person that their friends or their family refers to them, right? Which is usually a good start because the first thing that you need to have with the person you're working with is trust, right? So
Right.
so getting them referred by a friend um, or your family accountant, is a good first start. The problem is that most CPAs and accountants, and you don't need a CPA to do your taxes. Well, let's get that out of the way right away, right?
Okay.
The CPAs are not necessarily the best person to do these taxes. There's professionals like EAs, and just people who are generally have been around and do enough of it, right?
Right.
So so people usually start with that. Some of them are going to the H&R blocks of the world, and TurboTax is a big one, especially when you first start. If
Hmm.
you're on W-2, TurboTax is great for you, right? Um, but what we have to kind of recognize, I'm sure the vast majority of the people on this webinar are freelancers, or they're paid. They're really a business, right? So we try to make you think of it as a business. So you really want to have an accountant that has expertise in the corporate tax code, which is where most of the participants here are going to find themselves, right? Because
Hmm.
you have the individual tax code, which is just you and the IRS, right? So they have to give you all these restrictions and all these formulas and everything else on what you can write off, what you can't write off. There's more what you can't write off as an individual. In the corporate world, the corporate tax code was never really meant to be accessible by people like us, right? It was really written for the big corporations, right?
Hmm.
And the internet brought us the ability to access the tools necessary at a price point that makes sense for us to get away from the individual tax code, which I strongly recommend, and get into the corporate tax code. And we'll go through like how we do that, right? It's really not
Yeah.
complicated, but under the corporate tax code, it's the code is designed to help businesses grow, right? So you as long as you're spending the
Oh,
money you make and investing the
yeah,
money
yeah,
you
yeah.
make, right? Then you're not really supposed to pay corporate taxes. And if you
Hmm.
think about some of the biggest corporations that we all know, like Amazon and Tesla and all these companies,
Right.
they're you know they don't pay taxes. FedEx, I mean, big companies, right?
Hmm.
They don't pay any taxes. Why? Because they're growing. They're still in the growth stage, right?
Right.
And as long as you're growing, every time a company grows, it hires people, right? And then those people, most of them work on W-2, and that's who pays most of the taxes in this country. It's the W-2 employees. So
Okay,
we
that
kind
makes
of,
sense.
yeah, we
Okay,
try to squeeze in there.
so we have the results here. The majority is folks who have the tax firm they found,
Mhm.
and then second is the filing system.
Yeah, I mean that's about right. That's about my experience with things too.
Yeah.
That's pretty much what I see,
So
right?
when we bring it back to the individuals, then is I know I have been known to procrastinate tasks I don't really want to do, and I think filing taxes is in that for a lot of people. When I was self-employed, like I had now that I know I should have maybe a CPA wasn't the best thing, but I had a CPA back in the day in Nashville is one thing that she did help me understand was putting things off is not actually going to help me, and how to organize my receipts and how to track my expenses. So it was useful for that. When you think about your clients or what you see in general, where do you think the biggest points of hesitation or struggle are when people are anything around this topic of getting all the documents right, knowing what to do, knowing where to go, and knowing how to file?
Yeah, well, I mean, the struggle is real, and the struggle is almost like society kind of pre-builds this struggle into you. And my industry is I think the reason for this, for the procrastination that is definitely permeates this market, right? And and part of the reason is like there's no, even the people who have 4-year degrees and went to college and high school and all that other stuff, they don't teach this stuff, right? So when you get out in the real world and you're running around trying to get work and get in the industry and meet people and build your career, and then all of a sudden you're supposed to know how to handle all this, and it's just
Yeah,
not. They almost judge you more on how well you handle your business and everything else than they do on the quality of the work that you're putting out and the shows you're putting on, right? So
yeah,
so you can kind of have that working against people. And then my industry is famous for trying to scare you, right? I mean, most accountants will be telling you, oh, the IRS is a big scary wave, and you're just trying to survive the before the crash, and they make you afraid of the IRS, which never made sense to me because I've been dealing with them for 30 years, and I've never run across a scary person. They're all extremely
mhm,
reasonable and easy to work with, and they truly, all they really care about is that you comply, right? So that you just have to comply. Some people are super aggressive and some people are very conservative, but at the end of the day, as long as you comply, you're fine. So
right,
it doesn't take a lot, right? But when you don't comply, and again, the fear and the insecurity leads to procrastination, and procrastination leads to
right,
problems, right? Because the IRS is really just a big computer, right? People think it's a bunch of guys sitting around trying to screw you out of taxes, but it's not. It's just a computer, right? And
yeah,
25 years ago, when it became a computer, my one of my side opportunities is I do a lot of computer work, and I've always been a computer nerd. And so when the IRS went from the human based to computer based, I thought, okay, this is a gold mine for me. I'm just going to reverse engineer what the computer's doing, right? That's
I
exactly
see.
what I
Yeah,
did. I just, I had the benefit of 30 years worth of my father's also a CPA. So I had the benefit of
right. It's
30
the
years
family
he put
business.
in,
Yeah,
right? And I went and I looked at what returns were selected, what returns weren't, how much people had in every category as a percentage of incomes, per se, and kind of built the algorithms that would make your compliance work best, right? So then it just became a matter of, okay, now I have to get the clients to conform with that formula, right?
Yeah,
And
yeah.
and then the IRS, has now at this point in the current stage, it's really just a computer matching documents from 1099s, W-2s, and all that with
Right.
your tax return. And if it matches, the computer's not going to bother
Right. It's just
you. Right?
green check, move
Right.
on.
When
Yeah.
it doesn't match, it sends you a notice. Right. So,
Yeah.
back in, let's say, 15 years ago, if we got a notice for a client, like the whole firm stopped and was like, "Oh, what's wrong? Oh my God."
Yeah.
Now they come in, they come in every day, and we resolve them. And because the IRS is very far behind in their processing, they've never really recovered after COVID. Um,
Mm.
what used to take us 15 minutes to write a letter or fax it to somebody and say, "Hey, can you check this out for me? Can you close this case?"
Hmm.
They would close it. Now, 15 years later, we send a letter in, and sometimes it takes a year to get a response, right? And the response is usually positive, but in the interim, during that year, the collection team, right, different team at the IRS, they're
Hmm.
going to send you all these letters, right, and they're going to get more and more threatening and scary as you go. Now, even though you resolve the problem, but by the time they process that resolution, you're going to go through getting all these scary letters. And
Yeah.
and the reason they do that is because in order for them to collect that debt, if they don't agree with your letter, they have to demonstrate to a judge that they communicated with you,
They tried. Yeah, yeah,
right?
that makes sense.
So they won't stop doing that. So we do everything we can now. Kind of my mission is to get the word out that, hey, the most important thing you can do is comply. Whether right or wrong, you need to file something. Right?
Right.
It gives you the ability, the IRS, the ability to just match up the few documents that we have to match. Most of the clients nowadays, they're working as LLCs, electing to be taxed as an S corp. So they don't even need 1099s. The S corp doesn't match, right? So the income for a 1099 written to an EIN number, right? Any kind of entity, there's no matching program for that. So the individuals who get 1099s in their social security numbers, that has to match, right? So um, so you kind of avoid that whole problem. But if you don't file those corporate tax returns, they're going to come after you, right? Because
Right.
like that's when you have problems. So like we're creating all of these problems for ourselves by not just doing the simple steps of complying. Right?
That actually brings up a good, so the what we want to spend the majority of this time is the questions that were sent in by the folks
Mm-hmm.
as they registered.
Mm-hmm.
And the question that I was going to ask you is also a question that is in here. So we had a question from Yvette who asked if uh, would they need to create an LLC? They are a mix of W-2 and 1099 and are not sure if it's beneficial to still set up that like business structure. But it sounds like if I'm hearing you correctly, like yes, it is still beneficial even if you have also W-2 work.
Yeah, I mean, the as the accountant who is going to prepare all this stuff for you, I can tell you the most critical thing that you can do for me is form an LLC, right? So
Mm,
you and like we do all this for you, but I'm sure your accounting firm can do that for you as well. You
mhm.
form an LLC, you take the paperwork, that the formation documents, you go to a bank, you open up a bank account, and then for you, the LLC is just a bank account, right? We don't need to overcomplicate this. You're not starting up, a major organization, corporation. All you're doing is opening an LLC, opening a bank account, and then use that bank account and the LLC name and EIN number. So I always say to my clients, never give your social security out to anybody, right? Anybody you work with or work for, unless
Right,
they're paying you on a W-2, because some jobs will force you to take a W-2 and some will pay you freelance, and that's fine, right? That's common. It happens to everybody.
right.
But having that freelance income is going to greatly reduce your tax debt, because the freelance income, you have the ability to write your expenses off, right? So if you just let's just talk more about LLCs for a second. And
Yeah,
the
yeah,
reason,
because I'd like to understand the difference because it's people sometimes do say you want to set up a more corporate structure under these
Mhm.
circumstances and an LLC. And then where does sole proprietorship fit in? That's still an LLC. So can you clarify the difference between and then the pros and cons of them?
Yeah, so when the LLC came on the scene, which is a relatively new form of business, um, it kind of it was a little expensive in the beginning, but the price has come
Mhm.
down now, so it's actually cheaper to open an LLC than it is to open up a corporation or a company of any sort. And what I recommend strongly in this current moment, right, is just open the LLC because the LLC then gives me the ability to elect how you want to be taxed. So I can retroactively, right? Because you can go back up to 3 years here. So if you're an LLC, which is just a checking account to you, I can then look at your transactions for the year, how much money you made, how much you had in expenses, did you save a lot of money, and come up with the best tax strategy for you. Some people very early on when they're not making much. Some people I just put the LLC on their personal tax return, what's called, you may be familiar with the Schedule C, right? That's the personal form. Now we avoid that as much as possible because that's where all the audits come from. Right? So in the last 10 years, I've had one corporate audit, which we did win, and it probably had a couple hundred Schedule C audits. So we really only use that because it's cheaper for you if we file it there. There's only one tax return,
Right.
but it's only in very minimal stages. So you may plan to say, well, I don't know how much I'm going to make, and then you get on a big tour and you make a ton of money. That's okay. You're an LLC. I can elect then to tax you as an S corporation, which is, in my experience with the clients I deal with, that's where 99% of them go. Some of them we just do it the first day because we know how much money they make.
Right.
So that gives me the ability to kind of help you decide. And some of them can be taxed as partnerships. So there's no tax code for an LLC, right? So the LLC can only elect to be taxed as an individual, partnership, corporation, or an S corp, right?
Mhm. Yeah.
And the best part about that election is you can do it retroactively, right? So now if I have one person, and my experience has been a lot of the people that come into me, new clients, they come in with multiple years not filed, right? That's why they finally sought
Ah,
me out, right?
right.
So for those people, when they're using their social security number and they're making all their money that way, it's usually a pretty bad experience for them. It's never as bad as they think it's going to be, but there's things we can do, but it's not going to be the best scenario. If the person comes in and says, I have an LLC, I've been using it for the last 3 years, I just haven't filed anything, then you're probably going to get out of that without a problem, right? You'll have
Right.
a lot of notices are going to come your way, and you're going to have a lot of headaches, but none of them are going to result in money, right? So you sign in. When you do that, you sign in for a lot of headaches, but usually we can get you out of the money problems. So
The thing you just said
that's
that it triggered a question because you said, here's these folks and, we know kind of what their income is and here's what they should do. So that when I was working with artists, they were emerging artists, very early career. Is for a lot of them, there isn't really a lot of income yet. So is it still beneficial for people to do this as soon as they start booking shows or getting freelance work if you're crew or a TM? Just do it as fast as possible. Don't wait until you hit a certain income threshold. Just do it from day one, it sounds like.
it's never going to actually
Like it's never
cost you
too
money,
early to do it.
right? Because
Right.
you remember the only way I can write expenses off at all is through that LLC. Right? As an individual, you can theoretically write expenses off through that Schedule C on the personal return, but you're just begging for trouble that way. As an as
It's
an
a
as an
second red
LLC,
flag.
yeah, exactly. Really, really, mostly what I do is kind of risk mitigation, right? So like we talk about,
Right.
hey, is that this is a low risk deduction. I think we should take it. Or hey, this is going to be a higher risk deduction, but this is the money it's going to save you. How comfortable are you with that, right? So because everybody has different risk tolerances, right? So our job is to kind of express your risk tolerance on the tax return, and a lot of times that's driven by money, right? Well, I don't have this much money to pay in taxes, so I have to be a little more aggressive. and that's
Right.
fine.
Yeah.
Again, because the aggressiveness is really just in your own mind, right? We talk about IRS. We've already said the word audit several times, so let's put
Mhm.
that in perspective real quick. The the individual tax audit rate is somewhere in the 3% range, right? The corporate tax audit rate is somewhere in the 0.05%. And when you file things timely and properly, um, it's almost zero. It's like hitting lottery, right? It's not. It's like you buy a lotto ticket, you don't expect to win, right? The audit rate's the same numbers, it's the same math.
Mhm.
So there's no reason to fear that, right? Now that doesn't mean that you should go and write off, your dog food and everything else that might not be appropriate, unless your dog is used in some way in the business advertising. But
Yeah.
the
Yeah.
so there's never a no in the corporate world, right? For write-offs. But you have to kind of mitigate that risk. So there's no reason to fear that, right?
Oh, interesting. Okay.
Yeah, so that there's another thing that my industry scares you with audits for some reason, but there's really nothing scary about them. Even the ones that we do manage, they're usually very reasonable to deal with. But that's why I try to avoid the individual tax code as much as possible,
Yeah.
which
Yeah.
should be an indicator as to like your experience level of your accountant, right? So whoever you hire to do your taxes, help you with them, they should be someone who's experienced in corporate tax code, right? So my first question
Right.
when people ask me this, I always say your first question for your tax preparer is, how many corporate tax returns did you file last year? And if that number's under 1,000, keep looking, right? Because individual most accountants and tax preparers are trained mostly on the individual tax code, right? So you go to H&R Block, they'll file a corporate tax
That's
return for
individual.
you.
Yeah.
But really what they're really trained to do is individual taxes. So that's you want to get a corporate focused um, tax preparer, because that's what you are. That's the individual tax code has all these restrictions and limitations, and a lot of individual accountants will bring those limitations into the corporate world where they don't belong, right? Because it just feels wrong to write some of these things off.
Right.
That
They may not have, like to your point, right? They don't have enough experience because that's not what they do day to
Right.
day,
and
to
and and
guide
really
people
what it
to that
is you need
corporate.
to see the results, right? So like if
Hmm.
I file thousands and thousands of corporate tax returns, and I see the results from that. So if 1,000 of your friends do something and it doesn't cause any problems, probably going to be okay for you too, right? So that's kind of where we stand with this. Like the deductions that people take in the touring industry, they don't they don't feel like it's a good deduction, right? Just people who are maybe independent artists who are writing off hair and makeup and all that. As an individual, you can't do that, but as a corporation, you can, right? Because you think of the LLC is really set up to be a production company, right? So if when Master Tour sent the hair and makeup team to me, and they did my hair and makeup and left this morning, there was no
Yeah.
that didn't happen.
The glam
There was
squad. Yeah.
they cheaped out on that one. But if they had sent the crew in that did my hair and makeup and left, like I wouldn't pay that person. I wouldn't have to write anything off. Master Tour would certainly be able to write it off, right? Because they're dolling up their crew, right? So the production company always can write
Oh,
those things
that's an
off.
interesting
But
shift. I
the
didn't think of
but
that.
but
Yeah.
as an individual, even though it's just you need to do your hair and makeup to do the webinar, you can't write it off as an individual, but as a production company can. Now in the LLC phase, you are the production company, right?
Right.
So there's a lot of things that, again, this is not something, did you file over 1,000 corporate tax returns last year? Yes. Any of them, in the I like to call it the creative spaces, right? So like
Yeah.
my clients generally are in creative spaces, right? Producers, directors, writers. These are, we focus mainly on the crew, right? So our
Mhm.
philosophy has always been, we don't chase A-list celebrities. We work for the people who work for those celebrities.
Right.
So we work with the crew, and that's where we feel like we bring the most value. Um, so that's that's what you want to look at for when you find an account to help you,
Yeah,
right?
one of the questions said that now that you were talking about the hair and makeup, right? They're coming in and they're your
Mhm.
contractor to do something. So we have a question from Michael, who asks for employing subcontractors, is it best to have them send invoices or use 1099s? And then please cover that as paying musicians as contractors, if that's different.
Yeah, well, whether you're an LLC or an individual, if you're paying somebody, before you pay them, you have to have them fill out either a W-9 or a W-4, right? Now,
Mhm.
that just means it might got to pay you as an employee or it might got to pay you as a subcontractor. And the form is just name, address, and EIN or social security number, right?
Right.
It's not complicated. You send them a form, they fill it out, they sign it, send it back to you. You do that before you pay them, right? This is a very common mistake that causes problems. Then once you do pay them, at the end of the year, you tally up how much did I pay Liv last year as an individual. Well, she's not a company, so I have to send her a 1099. So in order to secure the deduction from my return, right, I have to issue you a 1099, which is what that's doing is telling the IRS that you made $10 million this year from consulting with me, right? So now the IRS is going to match that 1099 to your personal return. Make sure you pick up the income. That's the computer, right, doing the matching.
Right. Again, that matching.
Mhm.
Yeah.
Now, if you don't issue a 1099, you can still write it off. It's actually the overwhelming majority of people don't issue 1099s the way they're supposed to. But it's still a good tax write-off. And then, but if it's ever challenged, you'll automatically lose. Right? So you can have a completely
Right.
legitimate expense on your tax return, and if you're in one of those unlucky few that get audited, the IRS will look at the expense and say, okay, this is a perfectly valid expense, but you didn't issue a 1099, so we're going to deny it. That's what happens.
And
Honestly,
is that sort of the
I've
default
really,
of like
you almost never see that happen.
deny to make you fight it? Is that kind of the default?
No, they'll just deny the expense, so then you'll have to pay tax on that. You have
Oh,
to
right,
add
I
that
see.
write-off back, and then it becomes a tax penalty and interest bill, right? So it's the 1099s are there to protect you. Mostly, they're not there for the individual who received it. They're more there for to protect your deduction.
Yeah,
Right?
yeah.
Now, if the person you're paying is a company, right? If they're LLCs that tax themselves as S corps, there's no reason to issue a 1099 because the IRS doesn't match 1099s on S corps. So
Yeah.
so like you have that, but you can certainly issue it, right? If you're not sure, issue it. It doesn't cost much anything to
Mhm.
issue a 1099. So
Okay.
so you're always
A
you're
very
always
quick,
safer to issue it.
right. So it sounds like the error on the side of caution and just issue it so
Mhm.
you know. This is a probably a very quick yes or no question from Eddie, who asks if stage gear is 100% write-off for the first year that you are in this, LLC or setup that you do. Is the stage gear that they buy 100% written off in the first year?
Well, equipment, right? Any equipment that you write off or is subject to depreciation, right? So this is where it sounds like it's going to get complicated, but it's really so if I buy a piece of equipment that's going to last 5 years, right? The old ways were the old traditional depreciation method said take off 1/5 of it each year because that's when you're using that expense. So you
Right.
match the income to the use of the asset, right? Now they've accelerated depreciation methods, substantially. So currently, you pretty much can write off take all 5 years depreciation in year one, and that's what's been happening over the last 4 or 5 years. The depreciation methods have been more accelerated, right?
Mhm.
Because the IRS is trying to, it's really Congress is trying to encourage companies to buy and build here, right? And build properties here and plants and
Yeah.
create jobs, right? So they're letting you have that tax benefit. So yes, in most cases, you're going to write off 100% of the equipment in the first year. Even if you just write it off as I bought equipment and I paid for it, you write it
Right.
off and you skip the whole asset and depreciation process, which is what we do for the smaller stuff. The big
Yeah.
stuff we still depreciate.
Okay.
But
Sounds good.
yeah,
We have a question that I think is probably on a lot of people's minds. So two different people who are both named Aaron. So we have two Aarons who are asking about thinking about the future. So both of them say a version of when I want to plan to buy a house later, what can I start putting in place now? And then also, what are things to start thinking about when you have inconsistent income, as a lot of folks do, if you are doing contract work, to put yourself in the best place possible to make that house purchase possible.
yeah, that's a tough one, right? I mean, it kind of leads into the depreciation conversation. So there are things you can do on your tax return to make you look more favorable to the underwriters, right? The bank underwriters who evaluate these things.
Yeah.
Most of the clients I deal with are not running through the traditional mortgage process. These the private mortgages, are way more prevalent now. Like there's they're much easier to get, right? Sometimes they're a little higher rate, right, than a traditional mortgage. But the consequence of so on your tax return, if you're showing a lot of taxable income, then traditionally you're going to qualify for a larger mortgage, right? When you show
Hmm.
very little or no or losses, which is very common too, um, then of course it's going to be more challenging to qualify for a mortgage. So there are things that you can do that like what we do is just what we talked about earlier. When you buy a piece of equipment and it's called capitalizing the equipment. So if you capitalize as much as possible and then depreciate it, what the underwriters do is they take your let's say you have a small profit. Well, they add back depreciation and amortization and all the non-cash expenses,
Hmm.
right? So so you may show a $10,000 profit, but you have $30,000 in depreciation. So the underwriter will see you as a $40,000, right? So those are kind of the things that
Yeah.
when I said I spent 20 years on the phone with everybody. You know, I'd say almost all of those calls had nothing to do with taxes because people really didn't understand the taxes so much. These are the questions that I
Yeah.
get. How do I get a mortgage? And we've always seemed to find a way, right? But that's the only alternative to that is to start paying a lot of taxes and showing a lot of income, at least for the 2 years prior to
That you want to
getting a
get the
mortgage.
mortgage. Yeah.
So, if you came to me and said, in 2 years, I'm going to buy a house, I want to show more taxable income. What, and I've had this scenario many times. And I show them, and then they have to cut that check for the taxes for 2 years. It's a big closing cost, and it's
Painful.
discouraging. But more likely, what happens is, hey, we're going to look for a house. What do we have to do? And the returns are already filed, and everything's already done. People don't usually plan that far in advance, at least the ones that call me, right? So
Yeah.
we have to find a way to make the tax returns work for the mortgage, but it's usually a non-traditional lender that comes in to write these mortgages.
For the thing. Yeah. We have a
Mhm.
really good question in the chat from Alexandra. So she asks and it's also residence related. If you move your primary residence overseas, are you still filing in the US? And if you do, would you have to search for someone with a specific title? What would that be? And Alexandra, if I'm misinterpreting your question, please correct me in the chat. But the someone with a specific title, I'm assuming that refers to the type of tax firm that would be brought in to help with that.
Yeah, so if you're a U.S. citizen or green card holder, you have a social security number, you're required to file a tax return every year, right? So even if you
Right.
move out of the country for 20 years, you're still filing in the U.S. Now that doesn't mean you pay double tax, right? So when you file in the U.S., if all of your income is in Germany and you paid German taxes, the U.S. tax return just says, okay, Liv made this much money. She paid this much in German taxes. This is how much she would have paid if she was in the U.S. It's usually much lower, the U.S. rates.
Mhm.
And then the difference they will not refund to you, but they won't make you pay any more. So if you paid $10,000 in tax in Germany, and in the U.S. you would have only owed 8,000. There's no refund. You don't owe anything. You filed the
Right.
return. Computer's happy. No, nobody bothers you. If you paid 8,000 to Germany and the U.S. tax would have been 10, you've got to pay the other 2 grand.
The other two.
Yeah.
Yeah.
So, but most countries you deal with actually have a higher income tax rate than the U.S. does.
Yeah, related. So, also
Mhm.
an international question that was submitted as part of registering. Can you speak to Canadian residents who tour in the US on O visas? What are their tax obligations to the US? And then do they need Social Security? Do they need a tax number? Like how does that work for Canadian residents who tour in the US on a visa?
Yeah, well, they'll get a taxpayer identification number, a TIN number,
Hmm.
when they get the work permit to be to work in the
Ah, okay.
U.S. And they will record their income and expenses, or their W-2, however they're paid, will be filed on a non-resident tax return in the U.S. And then they can take the foreign tax credit, right, and in their Canadian return. So again, the Canada is not going to charge you double tax either. If you paid tax to the U.S., Canada gives you the credit for it as well. Um,
Excellent.
yeah.
And
So
one of the other questions that came in, the answer is yes, from Allison was, does PTA have experience doing CWAs for international clients?
we work on the U.S. taxpayer side, right? So if you're a U.S. taxpayer and have to file
Okay.
U.S. tax returns, or if you're a non-U.S. taxpayer that has U.S. obligations, that's where we focus our attention. We
Okay.
don't. I mean, I've been doing this a long time, so I've seen the other countries' tax returns, right? But what we would generally do with them is we have relationships through Europe and so forth to help you get a local accountant for the actual country that you're doing filing taxes in.
Yeah.
But then we take the foreign tax credits and we deal with them on the U.S. side.
Nice.
So yeah, so you're not going to be able to afford a firm that operates in 20 countries. Right? You're just not.
Hmm.
Nobody on this webinar is going to be able to afford that. But you generally don't need that, right? So if you're working on a major contract, you got to remember most of the tours we deal with are touring in multiple countries, right?
Right.
So this is pretty common to deal with in this industry from the U.S. side of it at least.
Yeah. The question from Jess, when I tour as a W-2 employee, payroll companies pay excessive tax out to states I don't live in. How can I fix this?
Yeah, so that's the downside to being on a tour and getting paid on a W-2, right? So,
Mm.
you'll see the cast and crew W-2s. Sometimes I get them and they're this thick, right? The Because theoretically every state that you work in, you have to pay tax to, right? So when they'll allocate your salary even into, you spent 10 days in Boston, well, they're gonna 10 days is gonna go to Massachusetts, right? So when we do your tax return, we have to do all the state returns. Now the withholding on the state returns is usually spot on, right? And then if you live in California and you work in 5 other states, the tax that you paid to those 5 other states is the same as the foreign tax. You can take a credit in California. So if you owe California 10 grand, but you paid 6 grand to 8 different states, then you only pay California the four, right? So you get credit for those taxes. So you're not paying double taxes in multiple states. It becomes a bit of a filing nightmare. Like that's the return you do not want
Yeah.
to do in TurboTax.
Yeah,
Yeah.
I was just saying that's not an
Mhm.
H&R Block thing.
Yeah. I spent a lot of time fixing those returns 3 years later and dealing with the warrants that get issued for people when they go back on tour 3 years later and get pulled over and they have a tax warrant.
Yeah, no, it's like
So
a panic.
yeah,
Allison is
it's because
actually
most people
here.
don't file.
Richard Ellison is actually in the audience and she clarified. So the question about the CWA is in reference to international artists performing in the US. They either have to file a CWA or expect 30% of gross to be sent to the IRS, which can usually be retrieved when they file their US tax return at the end of the year, just to clarify the context of her question.
Yeah, so that's what they call backup withholding, right? So if I'm paying you and you don't have a social security number or EIN number to give me on that W-9 form,
Right.
then it's my responsibility to say, okay, I owe you $1,000, but I'm only giving you 700. I'm giving the IRS 300, right? And then when you file your tax return, you pick up that tax just like withholding on your W-2,
Yeah.
right? So this is a way of forcing non-U.S. citizens, right, to file a non-resident tax return. Because otherwise, if you're an artist from Europe and you come here and make a ton of money in the States and leave, you're not a citizen here. They have no authority over you, so they can't force you to file. So what they do is they if you give them ahead of time an EIN number or social security number, um, that they can attach to, then they won't make you withhold the backup withholding.
Okay.
But if you don't, then you're responsible to withhold
Right,
it.
then it's all you. Yeah.
Mhm. Yeah.
Continuing in the international realm, let's solve problems in real time, Richard.
Yeah. Cool.
So Alexandra put a question in saying, as a UK tax resident with a USO visa, do I need a social security number in the US? I have been sent a 1042S by a US client, and they said, please forward the document to your accountant in the UK, and they will advise. But she's still lost. So how can we help Alexandra make sense of this?
Yeah. Well, when they issue the work visa, they'll give you a taxpayer identification number, right? And that
Right.
taxpayer identification number is pretty much the same thing as a social security number, right? For a
Okay, so
non-citizen.
same as the Canadian answer, the
Mhm.
TIN
Yeah.
that's issued as part of
Yeah,
the
it's
work
it's
visa.
all kind of the same issue, right? You're just looking at
Yeah.
it from an international performer here or you going there. It's more or less the same. But you have to establish, you have to tell the IRS, I'm going to file a tax return. I'm allowed to work here. Here's my TIN number. And then they won't require you to withhold the backup withholding, the
Yeah.
30%.
Okay, awesome. So and at several moments we've had, and there were a few of the questions that came up as people registered that are all versions of, is it better to be paid at 1099 or is it better to be W-2? And it sounds like, again, correct me if I'm misinterpreting it, that it's almost better to do the 1099 and set yourself up as a contractor with their own business. So be a business as you are
Um,
coming in, to give you more control. Am I interpreting that right?
I don't know, but it's a great question because it's right on point. So if you're a W-2 employee in a state like California, for example, you're going to pay around 30 to 35% in taxes. Right? They'll withhold a lot of it, so you don't have to write the check, but they're still taking your money. Right? With the withholding
Right.
is just the same as you paying estimated taxes. If you're a freelancer making the same money in California, and you do your tax return, efficiently, you're probably going to be below 10%. So it's always better to be a freelancer or a 1099. We use that 1099 term, but that's 1099 is only if you're using your social security number, which you're not going to be able to get those results that way. You have to
Right.
use your
That you
LLC,
explained that
right?
before. That doesn't
Yeah.
that puts you on the individual
But,
Schedule C stuff.
but
That's not
yeah.
beneficial.
But I,
Yeah.
I have a lot of clients on Wall Street because that's where I'm from originally, New York, and they all get paid millions of dollars on W-2s. And the first every it's almost like every year I have a new person coming in. They're making $3 million on a W-2 on a trading desk, and they
Mhm.
come to me and say, "How do I stop? I'm paying $1.5 million in taxes. What do I do to minimize this?" And I always tell them, marry a freelancer, right? because the because the freelancer has the ability to take losses, has the ability to write off expenses,
Right.
that the individual would never have that ability, right? So, um, so yeah, it's always going to work out better for you if you do the few steps that are necessary open the LLC, use the LLC, use the
Yep.
EIN number. It's all you have to do, right? Like most of the clients I deal with, I open their LLC. The first thing I send them is the documents to open a bank account, and then in a separate email, I send them a W-9. So this is your W-9. Everybody you work for, just forward this to me, right? And then they
Yeah.
have my number in case they have a problem, and they have the W-9 with the EIN number. If you, that's all you have to do, right? The rest of it gets done through your bank. Your deposits in the bank become your income. The payments out of the bank become your expenses. Now, they
Hmm.
might not all be deductible, right? But you won't know that during the year. So I encourage people to use the account as much as you want, right? You can,
Right.
don't be sitting around saying, "Oh, this is business. This coffee is business. I'm going to use my business card. This coffee is personal. I'm going to use my personal card." If you do that, what you're doing is my job on a transactional basis. That's
Hmm.
something that I don't even do. Now, most accountants, this is another way of my industry kind of screwed this up. Most accountants will tell you never do that. Always only put your business expenses through the account, right? Um, and that would be perfect. If you can do that, that's fantastic. I don't really know anybody that does. I don't do it myself. If
Hmm.
Because I don't know if, like, for you, for example, your first year LLC person, I don't know if I'm going to tax you as a corporation or an individual. So I don't know what's going to be deductible for you, right? So now, back in the day when we used to do everything by hand, we had to minimize the number of transactions. Otherwise, it would cost you a ton of money to have me go through and figure all this out. But
Yeah.
now, like, we're all doing this with the computers now. So I
Hmm.
don't care if there's extra transactions in there. The computer will deal with them. And then it gives me a big picture of what you spent money on, so I can help you decide what to write off. Otherwise, I have to go get your personal records and your business records and see if you chose to pay personally with something that we can deduct under the corporate tax code, right? Something you're not going to be familiar with. Most CPAs and accountants are not familiar with experience with corporate tax law,
See, now
right?
I wish we had met many years before because I was given exactly that advice of like, here's your business account with your business card, and here's this and everything. Never the twain shall meet. But now that I'm hearing you talk, I was like,
I get a lot of flack for saying this, Liv. I get this all the time.
no, I
Old
appreciate it.
CPAs, accountants will be like, "Oh, you can't do that." Yes, you can. You can't necessarily write off everything you spend, right?
Right.
But just
And
because
you
you pay
shouldn't.
it,
Yeah.
just because you pay it from your LLC checking account, does not mean we have to write it off. It just means that you're giving me the ability to consider it with
Yeah.
you and make a decision that's best for you, right?
All right.
Otherwise, it causes more problems.
Right. And which I'm sure I ended up, I
Mhm.
probably paid more than I ought to have now
Mhm.
that I know this. We have two more questions, so I'm going to try to get to both of them. The first question is from Michael, who says, I am married and my wife and I filed jointly. I'm a manager, agent, tour manager, and producer, and I'm 1099 by all my clients. The wife, she is a graphic designer and has her own business, and we both work out of our home. She gets a P&L from her bookkeeper, and then we use our family accountant. Would it be advantageous to file separately, or are they already on the right track?
No, no. Filing joint is perfectly fine. The only time we file separately is if maybe one person has a big IRS debt or a student loan debt that you don't want to necessarily mingle the books together for.
Mhm.
But if you're both in the freelance world, file it together. A lot of the couples I have who work that way, they only have one LLC, right? A lot of them have two
Right.
two LLC checking accounts, so they keep their stuff separate. But on the tax return, we combine it all together, which is perfectly fine to do as well. You can
Perfect.
do completely different things through an LLC, just like these big corporations. They have many different lines of services and products they sell. It doesn't have to be in the same industry. It can be completely different. So, like, one of the ways you can kind of minimize your expenses and cost, right, to have your accountant work with you is to kind of combine these things. So
Yep.
there's no reason to file separately if you both have independent businesses, unless maybe your wife is super aggressive and you're super conservative and you want to keep it separate that way. I mean, there's
Yeah.
reasons for married filing separate, but there's never a good tax reason.
Okay. Yeah, it sounds
As
like
long
they're
as
on
you're
the
as
right
long as you're
track.
under the $1 million
Yep.
taxable income
Awesome.
range, then you can
Um,
submit these.
A question from Matt. What is the best way to pay yourself from the LLC to limit personal taxes?
You just transfer money to yourself. If you want to transfer money to your personal account and spend it on things that are absolutely personal, that's fine. There's no if the LLC, you don't have to record it as payroll per se, right? So you
Right.
don't have to actually pay yourself. If you think about it, most of the clients I deal with, they just pay their bills out of the LLC, and then we don't write off the personal ones, right? So they
Right.
don't actually have to take personal checks. But whatever money you pull out of the LLC, right, put into personal savings or investing, like that's going to build in a profit, right? Because if you make 100 grand and you spend 70 grand, you've got a
Hmm.
$30,000 profit. If you take that 30 grand and put it in your savings account or in your investment accounts in your personal name, or you leave it in your LLC checking account, doesn't matter. And you're still paying tax on it because I can't write off what you don't spend, right? So if you don't spend the money,
Right.
that's the first step. And is it deductible? Is what did you spend? So that's why I say like there are different forms of there are different avenues for these things for people who are making a lot more than they need, and they're you know there's ways that we can minimize the tax burden for those people.
Hmm.
But the vast majority of us spend the money we make, and then it just comes down to what can and can I not write off.
Yep, that makes sense.
Mhm.
I said two, but let's sneak into more in the last 5 minutes.
Sneak 'em in.
The one question that came in again was submitted ahead of time from Matthew. It's similar to limiting tax burden, who asks, what is the most effective strategy to minimize taxes when touring outside of the US? And I assume as a US musician.
If you're running under the LLC plan, you're just paying your bills, and it doesn't matter where they are, right?
Okay, so
So
it's just still US
yeah, it's
taxes.
the same program.
Right.
It doesn't really make a difference where you are, and you may be subject to taxes in the foreign companies countries, but for your U.S. taxes, it's still just money comes in, it's income, money goes out, it's an expense. Can we
It's the
deduct it
same.
or not? It's the same thing. Yeah.
Yep. So the last question is from Jason in our chat, who is asking, is there a bookkeeping software or cloud-based program like Xero or QuickBooks? Oh, we have an extra question coming in. You have found works better with people in the music industry, and it would be remiss to not point out that PTA is available. And the if Anne Marie can put the link to get a free consultation with PTA in the chat again, Jason, so that could be
Yeah.
an
Before
avenue for
before we
you.
run out of
But
time,
what's the question? What's the answer for that one?
Emery's gonna message everybody my email address and so forth, right?
Yep,
Any
yep.
question that was not answered or you want to follow up on, email me. I will respond to you. Happily give you the information, not try to sell you anything, right? We don't sell this firm. You want help, we're here to help. This is a tough question for me personally because remember I told you I was a computer geek. Well, I have a computer development company that created software specifically for this this type of accounting, right? And my
Yeah,
my goal was to get the cost down. So there's it doesn't really necessarily matter which software you use, right? It just comes down to how much are you going to invest in it, right? So
right.
I
You,
built I
you
built
kind of like
software.
you give what you no, you get what you
Yeah.
give. So
So, the digital bookkeeping world has come and gone, in my opinion, because the digital bookkeeping world requires you to do all the work,
to do the
right?
things,
So,
yeah.
yes, AI will come in and help you sort things, but ultimately it's up to you to kind of figure that out. My program really
Yeah.
eliminates you from the equation. It just reads the transactions from your bank account, credit card companies. AI makes it very efficient for my bookkeepers to review, but we have a live
Mhm.
bookkeeper reviewing every transaction. Now they're extremely efficient, which is why it's so low cost. But it doesn't have all the bells and whistles that QuickBooks would have because
Yeah.
my clients never logged in. When I first built this 7 years ago, I gave everybody logins. I had a beautiful dashboard and all this information. And after about 3 years, I realized not a single person's ever logged into it.
Right. They don't need to.
Yeah,
Yeah.
because they all want them in the beginning, but then after a month, we never see them again. Because I'm getting what I need, you're getting what you need, which is peace of mind, because you're not thinking about this. You're
Right.
just using your checking account and going about your business. And we're in the back end sorting everything, organizing it, and telling you, hey, this is what we think you should be writing off. This stuff is questionable. Let's talk about it. And here's your tax results, right?
Yeah.
So
Let's go full circle. So Aaron put another question, and we'll have this the last one. Saying, I was under the impression that LLCs don't provide tax benefits, only reduce your legal liability if sued, for example. Could you please speak more to filing as an LLC versus sole proprietor? And by sole proprietor, I assume that means like just doing a DBA.
yeah, well, sole proprietorship or DBA, doing business as, they're just masks for your social security number, right?
Hmm.
So when you're a sole proprietor, you're subject to individual tax code on that Schedule C, right?
Yeah.
So again, things like rent, for example, only the portion that applies to the specified area, right? They limit your expense rate
Yeah.
down. Corporations don't have that problem. So there's a lot of stuff like that, and then that is the most audited form the IRS has. So if you look at the number of audits per filings as a percentage, it's overwhelming that's going to be the winner, right? The Schedule C. But and then all the net proceeds are also subject to self-employment tax, which is another 15.3% on top of the
Hmm.
income tax, right? In the corporate world, you have to pay some money has to go on a W-2 to yourself, but not all of it, right? So in the
Yeah.
individual world, all of it, and your profits are going to be much greater because you can't write off a lot of the things that you can.
Hmm.
So, as far as legal liability, I'm not a lawyer, but I've been doing this for 30 years, right? So I really haven't run into a lot of lawsuits or problems like that where the LLC
Hmm.
has been a solution or a problem. Um, the LLC for tax purposes is disregarded. It doesn't exist, right? That's why you have to elect how you want to be taxed. So,
Hmm.
in the legal world and lawsuits and so forth, it's going to offer you some level of protection, but because you're not treating the LLC in a way that's going to be, um, you know, if you did actually run your LLC where you only wrote, paid bills that were related to the business expense. So like if you have a bigger company, you're going to do it that way, right? And
Right. Because
and
then it
then
makes
then, then
sense.
the LLC will give you at least protect your personal assets. But the way most of the people that we're talking to here are, they're just using the LLC to minimize the tax burden, right?
Yeah. Yeah.
They get sued, they're going to pierce the seal and they're going to come after you personally. It's not really the best legal strategy. But
Hmm.
if you're worried about that or you're in a very litigious industry, you bring the lawyers into those conversations, right?
Right. Then it's
And then
not
we'll, and
just
then we'll
about
do some
taxes. Yeah.
setups. We'll do some setups that are a little more unique to protect you. But the entity type is still going to end up being an LLC.
Right. Awesome.
Right?
Well, thank you, Richard. This was super helpful. Getting appreciation and thanks in the
Well,
chat here
thank
for
you.
you as well. For the folks in the audience, like Richard said, so you will all get the follow-up email that was going to include Richard's email, so you can reach out to his team. The link where you can set up a free consultation with his team, and obviously, keep the conversation going, help each other out. And make sure that, don't get too scared off by taxes, as Richard explained. Making it scary is often what makes the problem worse. Um, I hope the information was really helpful here. Be in touch with Master Tour as well. If there are other webinar topics that you would like to see in the future, please let us know.
All right, great, thanks. And please feel free to email me, guys. I promise I'm not going to sell you anything. I'm not going to try and talk you into anything. I'm just going to answer your question. Happy to
Awesome.
do it.
Thank you so much, Richard. I so
All right.
appreciate your time. Bye,
Thanks, Liv.
everybody.
Have a great day.
Bye.